Alright, this is going to be the first weekly commentary, yeah? So the way I want to do it is after every single week, I want to do a weekly review of how price traded within the market against our expectations so that we can have a rough idea of how price wants to trade next week, yeah? So along with the educational videos, I think that this will also help because it's going to show you the teachings being put into action within the weeks. I know right now we're going over some stuff which is boring, but it has to be done, yeah? So the US 10-year bonds. We went over the job of the market and the algorithm, and we're just going to keep going. And until we get to the intraday, you're going to have the midweeks, and when you finish all the content, it's going to make so much sense to you guys, I promise. So let's look at the DXY first, yeah? So this is the weekly chart for the DXY. Each candle, right, shows 1 week of price action, Monday to Friday. So let's study how this weekly candle closed this week, yeah? So it opened, it went high, it went low, and it closed close to its opening price. Yeah, so we'll call that a doji. Yeah, from the weekly, what can we see is happening? Yeah, this is an imbalance, but I don't expect that right now. Yeah, we see that all this price action is filling as it's gone up, and that is good sign of institutional order flow, right? Price goes, comes down, breaks higher, leaves an order block. Yeah, price comes down, fills the order block, moves up higher. In the expansion upwards, it leaves an imbalance. Price comes from this wick. Yeah, that's the close of the imbalance. You see price perfectly closes that and it's a move up again. Those are telltale signs that price wants to move higher. Ultimately, I want to see price trade within this gap. Trade within this gap and take out this high. When that happens, I'm going to be sat on my hands for some time. I want to see what the market wants to do after that. Remember, you don't have to trade every single day. I don't even trade every day. Monday, Friday, I take off. Unless Monday has a very clear setup, then I'll take it. Because one thing I want you guys to understand, and this might be a little off tangent, but it's still important because it's psychological. You only need a few trades a week. Think about it. If you hit 45% a week, that is 20% a month, 16 to 20% a month. Let's say that's on a 100k funded account. Guys, that is over 5 figures. That's over double £10,000. The more you trade, the more susceptible you are to losing your capital. You only want to take the high probability setups, and there will be the hardest part of your trading development and your trading journey is going to be those times where there are no trades. It's easy when there's trades. It's so easy. When your trade setup comes and you're taking it, that's easy. That's so good. But there will be those times, yeah, where the market is choppy, the market is just not favorable, and that's normal. That is normal. The best traders don't trade every single day. Yes, a setup will come every single day, but is the setup highly probable? Is it part of your trading plan? Probably not. Yeah, that is when you're going to be tested as a trader, and you will realize, yeah, if you have 100k funding, which is very doable. Don't get me wrong, it's very, very doable. Yeah, you only need a few percent a week or even a month to live comfortably. Think about it. £100,000 funding, every percent you make is £1,000 or $1,000. Then from there it's just a numbers game. Yeah. So why am I saying this? Because when price reaches certain areas, you want to see how price will trade within certain areas. You want to see, is it going to reject heavy? Is it then going to consolidate and accumulate some orders? We're going to go over all of these things. There's a lot of setups and there's a lot of concepts we'll go over. Yeah. But as of now, this is the weekly chart. Yeah. When we go into the daily, now the daily is a bit more interesting. So this was Friday, Thursday, Wednesday, Tuesday, and Monday. So what did Monday go and do for the DXY? The Monday went and it closed in a lot of this gap from this wick to this wick. It closed in a lot of the gap. There's still some gap that exists, but it closed in a lot of the gap early in on the week. My attention the whole time, the difference in this candle's opening and this candle's opening, that is called a volume imbalance. Price, even though it wicked through it, you want to see the bodies trade through it. Look at the body of this candle, and now look at the body of this candle. It's not random, yeah? Because what's the job of the market? Yeah, it wants to deliver liquidity whilst removing inefficiencies within the market. This is an inefficiency within the market. A volume imbalance, yeah, has to be rebalanced with price action. There was a gap in selling here. There was a huge gap in selling because yeah, it went down into it, but then it just bought up again. Yeah. So there was no selling that existed within this price range from here. Yeah. So from what's the opening with this? With the close with this one? 95,793 to 95,941. There was no selling. This candle comes and closes this volume imbalance, and we'll see how price moves up away from it. We've also created a swing low. Yeah. So I want to introduce you to, I've already introduced you actually, from high, from low. One sec. Comes into the optimal trade entry. Yeah. Don't mind these vertical lines, they're going to make sense here, but it comes into this optimal trade entry. Yeah. If I just remove this, can I move it? Yeah. Comes below the 50%. So it comes below fair value and then it starts making a run higher. We will go into depth when later on in the mentorship, we're going to go in depth with that teaching, and that teaching is that's when stuff gets extremely good and it will start to piece together. But we need a lot of high time frame narrative, macroeconomic narrative for that. Yeah. So now go into the 4 hour. Let me get rid of this fib. Let's go into the 4 hour. So what did price do? This is called a rejection block. We're going to go over that soon. This is a rejection block. Price trades into the rejection block. Yeah. And it trades away from it. Again, institutional order flow touch from the higher time frame. Price expands up, comes back, closes this volume imbalance on the 4 hour, closes this imbalance, price moves up again. Yeah. This is has to gonna get closed. So next week, I really hope we see to close that, and I'll probably be bullish on DXY, and I'm going to be bearish on the Euro USD. I'll go over the details why. Price comes back down, clears this imbalance from this wick to this wick, bounces off the rejection block, and I think we're going to come up to start filling in some more inefficiencies. So there's this inefficiency in the market. There's this huge inefficiency with the market. Yeah. And within the daily, we see that there's also this inefficiency to fill more of it and above it. Yeah. Ultimately, we want to see it trade above this high, but that is the last thing we want to see. But if everything else gets traded through, we anticipate this high to get traded through. Yeah. Now into the hourly chart. This is the good stuff. So each line, each space area delineates one trading day. This is Monday, Tuesday, Wednesday, Thursday, Friday. Friday is smaller because there's not a whole trading day. So how did the DXY trade? In Monday, it traded high, it comes back lower. Wednesday, it went lower. Yeah, we took out this high on Tuesday. Thursday was a very boring consolidation, and Friday there was a move up. Now let's dissect that even more. From this high to that low to this low right here, yeah, or even we can say to that low. This is something I taught for free, the optimal trade entry. And what lines up within the optimal trade entry? This volume imbalance. Price fills it perfectly and rejects off of it. These things you're going to start to realize week in, week out, the more time you spend with me, that these things, they're not rigged. I mean, they're not random. It's everything has a purpose. The algorithm that runs this, it has signatures of delivering price, and this is one of them. It fills it perfectly and runs away. Tell me, how can this be buying and selling pressure? There's a gap in the market. Let's all buy into the gap and then sell into it. What do we achieve from buying into the gap? Tell me that. What do we as people achieve? We don't achieve anything. The algorithm is doing its job. That's all it is. Yeah? Now, you got your new high, you find a low. This is the lowest low. Yeah? So it makes a low here. So when it makes the low here, every single time it breaks down lower, you want to change your fib to the new low. If this one went lower, you change it to the new low, and so on and so on. That's how you alter the optimal trade entry. There's a old high, and what reserves or resides above old highs? Liquidity. Price comes up, takes the liquidity right to the 70.5. Optimal trade entry comes down. From Thursday to Friday, I want you lot to study this. Let's go on the 15 minutes and study this actually. The Thursday and the Friday. We see what is building up here. Above here and above here. Liquidity. Yeah? A bunch of liquidity. We see price drive below it early in the morning. And then what happens? Takes off to one side. These are all teachings I've done in my free Telegram channel. There's a lot more to this that you lot won't understand as of now. But look at how price expands within the week. Yeah? Going back to the 1 hour chart. The high of the week was in what day? Monday. The low of the week was in what day? Wednesday. Yeah? What was on Wednesday? I mean, what was on Monday? That was a driver. That was Euro news. Thursday had the USD. And Friday had the USD. Now, applying those news events and the time of those news events, look how price expanded in line with the news events. Nothing here is by chance. Yeah? This was a gap we wanted to fill from this wick to this wick. We went into this order block here. We didn't break the low of it, make it equal low. So now when we have an equal low, what does that become? A sell side target. For when we do have a bearish scenario for the DXY, we have a sell side target. Yeah? Now, going on to the DXY. I mean the Euro USD, my bad. Onto the daily. The opposite of the DXY. Monday, Tuesday, Wednesday, Thursday, Friday. From Monday and Tuesday, I mean Tuesday and Wednesday, my bad. We come in and we fill this gap. When we see this long wick, we're gonna go into a deep teaching about these type of candles when we talk about imbalances. Don't pay attention to these candles. These candles, the algorithm, it doesn't really perceive this as real price action. The fair value gap actually starts from this candle. Forget this candle even exists. Trust me, just just trust me. It will make sense. You lot won't understand right now because it's the start of your journey. This candle is where you want to see it. So there's still a tiny bit of the gap left. From this wick to this wick, there's a little tiny gap left within here. Yeah. When I say within here, I want you to look at the vertical and the horizontal line. Yeah. So within this little area, there's still a bit of thingy. But what did we see that was made on the daily? It's made a swing high, and price is coming down now. Yeah. Imbalance and imbalance. So what do we want to see happen to the Euro USD? If this is a swing high that's been made, I want to see the swing low maybe fill in this gap, attacking this sell side liquidity below this low. Go into the 4 hour, and price traded exactly how we wanted it. Yeah, remember what I outlined in the Discord? We have this imbalance and we have this order block. Price traded. This is an order block as well as a rejection block. Yeah, price traded into this rejection block. If you don't know what a rejection block is, we'll go into detail. Don't worry. All these teachings, they're gonna make sense. I want you lot to revisit the weekly commentaries after we finish everything as well. Yeah, you will have access to them. Trust me. Everything will make so much sense when you start seeing how I've explained it from the start, and then I teach you the way I'm going to teach you. Everything will piece together. Anyway, price trades into this gap, filling it, ultimately into the rejection block. As soon as it gets to rejection block, what happens? Breaks down. Yeah? So now, fib into the optimal trade entry. Notice how the candles bodies don't close above it. The wicks do. The reason behind that is wicks, we don't care about the wicks. The real orders, the real price action is within the bodies. The wicks, especially long wicks, they're manipulative. The bulk of the orders are not there. There's no intention within the wick. Yeah. So when you wick above an old high, the reason why I don't count that as a break of structure is because there's no real orders that are willing to go above that high. And now that is a big gem. I'll repeat that. When price wicks above a high, there is no intention for price to stay above that high. Why? Because the main orders, the bulk of the orders lie within the body of the candle. Unless there is a body of a candle, yeah, and not just one body, I like to see a few bodies stay above the high, then there's no clear market structure break. Why? Because there's no intention, there is no institutional intention to break a high for higher prices. Always consider where the bodies close all the time, because that is the intention of that price. Yeah, of that price range, that is the intention of it. The wicks are manipulative. The main story of price action remains within the bodies. Yeah, remember that. Make a note of that as well. Anyway, we got optimal trade entry and we break down lower. Yeah, so now what do we have? We have more imbalance. Yeah, this is an order block, and we have imbalance within this candle's wick to this wick. Yeah, so let's go into the 1 hour. Let's go into the 2 hour before actually, because I do see something. Hmm, 3. Okay, let's stick to the 1. You want to be mindful of this area of price action. This is called a breaker. I'm not going to go into detail because I'm going to have a whole teaching about breakers, but ultimately we have a gap on the hour here. I want to see price trade within it, filling the breaker and the gap, and then I'll look for a bearish scenario to unfold. I just don't get short straight away here. Yeah, when I outline areas, you lot know this already, I've made it very clear. This is like institutional support and resistance, if you want to think of it like that. We wait for price to trade to these areas and then we look for entries. We don't enter off of it. It's an area of importance that we want to see a trade unfold from. That's all it is. Yeah. So that's something I want to have. Yeah. Into the 15-minute Euro USD traded perfectly. Yeah. So let's go over the trade from Friday. It's gonna make more sense on the 30-minute. So these two candles together, this one and this one, form the breaker. Yeah. High, low, high, high, low, low. You see our price, this candle here, because these two candles together make it up. Let me see if I can go to 45 if it's one candle. Nah, it's not that clear because some of the orders are going to the next candle. It's going to 30. Anyway, price doesn't break this candle. It doesn't break this candle. Yeah, comes up, retests it. Yeah, when I do these things, my stop loss will go somewhere here, like somewhere here. And then what happens? Let's go on the 50-minute. I'll show you how beautiful this price action was. This is institutional order flow at its finest. Yeah, price breaks down below, comes back down, test this. This is another breaker. Comes, tests it, breaks down. Look how many OTEs there are here, yeah? OTE from here to here, from here to here, from here to this one is an OTE. If your stop loss goes above this high, you're not getting stopped out. From here to here is an OTE. I don't think this one was an OTE. How many OTEs could you have got on Friday? Let me show you the 5-minute. The 5-minute, I remember how clean this was. Mitigation comes back down. Mitigation. We're gonna go over what mitigation is. Mitigation is one of my main entry drills that I do. Yeah, there was 4 or 5 mitigations offered on Friday Euro USD. And what mitigation is see how when you're breaking down lower, the candle's up and then it breaks down lower. You want to look at this price to trade back into this area and then you get short, which it does. Yeah, and then it happens again. This whole area becomes mitigation. Within the mitigation, you can see, you know, clear institutional points you want to sell from. Yeah, what I mean by that is this breaker. Price comes into this breaker again, comes back lower. From here to, if you go from this high to this low, an OTE is offered. Overall, Euro USD was very, very textbook. It was a very clean week. I know we did manage to get a lot of, I think it was 100% of the trades called correct. But this is a week that was very easy, yeah? So let's That week's done. Let's progress on to the next week. Yeah. So that's in terms of forex pairs done. Yeah. The weekly outlook of how price expanded. For Euro USD on the 1 hour, what happened? We saw that price was trading higher, higher into and closed this whole gap. If you compare this, yeah, if take a screenshot of this, I'll let you guys take a screenshot of this. Yeah. Take a screenshot of this and compare it to the outlook I had for Euro USD when I marked it up. It filled it perfectly and it broke down. Yeah. There's a lot more in here that I won't go over because it won't make sense. I need to let some teachings unfold for you lot to for it to make sense. Yeah. Now let's touch on Bitcoin. My stance on Bitcoin, yeah. So what happens here? We had the previous all-time high. We came back down and we broke it. But we couldn't stay above it. There was no body close above it. And what happens? We break down lower. We take out this low and we break down lower. Go into the weekly, break it, come back down. We take out this low. So what does this become? A failed swing high. From here is now a failed swing high. Now what do we have? When we expanded down, yeah, we had a gap from here, this wick, to this wick. And this is also an order block. People will say this is an order block, which is correct. It is an order block, but we don't give attention to that because the overall narrative doesn't fit this order block because this is a bullish order block. The overall narrative makes sense for bearish scenarios to unfold. So don't consider these things. Yeah. Now, when this swing low was made, we came back up, filled this perfectly. Yeah. Look how clean that is. Remember what I said from lesson one, the job of the market. You lot are seeing the job of the market happening. Order block breaks down lower. This swing low, this swing high is made. When you see this, what is the chances of this becoming a lower low? It's pretty high, right? Now, let me undo this. This is the breaker. Again, you're gonna see that I love breakers. I trade off breakers quite often. It comes right to the around the 50% level of the breaker, and then we break lower. I am targeting this low. Yeah, I think this week for Bitcoin would be overall bearish. I don't know how low the price will go, but I'm pretty sure that the weekly candle would close bearish. Go into the daily. Like I said, we wick above it. There's this gap. We close this gap on the daily and we break down lower. From low, higher to low, optimal trade entry, and we're breaking down. We want to see how price will react around this order block, and when it closes this gap, we could see a consolidation, yeah, because these are still, the algorithm still considers this as an order block, yeah. We could get small reaction. When I mean a reaction, I don't mean bounce off of it. I mean price could stall here. There's something that we'll go over. It's called how resistant a liquidity run is. When there's an order block, it becomes more resistant. Yeah, price is more resistant to break down to this low. So we could see it consolidate, maybe retrace up a bit, fill in the gap, and then come down lower and take it out. Yeah. So when I'm saying that, I'll just draw it out for you guys. So something like this, yeah. Come down into the order block, maybe fill this, and then come down lower. Something like that. Yeah. I like this. Something like that. That's what I like to see on Bitcoin. So that's my outlook for Bitcoin, yeah. On the 4 hour, this is a breaker. There's huge gaps to fill. Yeah, so if you want to get short on Bitcoin, Somewhere within this candle is where you want to get short, in my opinion. Yeah, from this wick to this wick, around the 50%, I'd is a good short. I'd say it's a very good short. This is a mitigation. Yeah, this entire high, this price action from this low to this high is an entire mitigation area which needs to get mitigated. So you could see price just come up to here. It could come up to anywhere within the mitigation though. So you're better off getting an optimal trade entry. Yeah, because the optimal trade entry, all it does is it outlines a bargain for your trade within this price range. If you want to sell it, you want to sell at a high price within the price range. So you're better off selling anywhere above 50%. So 62%, for example, is a bargain. So you're getting a high price to sell. So sell within the 62%. Things like that. Yeah, view it with some sort of logic. But yeah, that's the first midweek commentary. I know it's a longer video, but the real teachings are in the midweek. You're going to see that this midweek maybe is more useful than the actual teachings, and that's how it is because you're going to see it unfold in real price. Yeah, in real time and real price. So any questions, do you ask me? This is going to be also uploaded to the mentorship area on Telegram. I'm going to call these ones midweek commentaries, so you lot can decipher which ones are the midweeks and the teachings. Make sure you enjoy your Sunday, yeah, your weekends. Study, don't go too hard, because trading is a lot of mental game, yeah, and you need to be there mentally. Any questions, hit me up. Ask in the question section in the Discord. And yeah, that's the first midweek commentary, guys. Yeah, take care of yourselves.